Rahul Bhasin joins us. Let's take our conversation forward, understand the trends, outlook, and themes to watch out for 2023. Rahul, good to have you back. Thank you for joining us.
Very good morning. My
2022, in
pleasure.
a sense, has been a year of it's been a year of reckoning, right? Interest rates go up, and a lot of businesses they get derated. A lot of excesses in the market have got weeded out, and a realization has kicked in that growth is not the only factor. You need to have profit more than market share gain. What do you mind will be the dominant theme for 2023?
Nikunj, I think that the trend that we've been seeing recently of the last year or so will continue. I mean, we have to understand that interest rates rising in the last 1 year in the context of the fact that they have fallen for 40 years systematically. Right? And I think that the fact that you've seen a reversal now, um, it doesn't mean that this is short term, temporary, transient, or any of those things. It might be you'll get the sort of little bit of heart attacks every time there's a slowdown in the global markets or the economy shrink a little bit. But I think structural inflation is not going to be that easy to get rid of, simply because it's not only the monetary factor, it's also because of supply chain shocks, it's also because of underinvestment in the entire commodity value chain for a long time. And on top of all of this, you've got also dislocation, and you'll intersperse this with bouts of sort of, falling prices largely because demand is coming off in places, or because the very high debt levels will lead to distress and distress selling. So we're in for interesting times, is what I would suggest. But like in any other situation, any other time, you'll always get the disruptive plays which are always going to be available in terms of investment opportunities. And you'll also always get the bottom up companies which have, systemic, which are actually going to benefit from disruption and from harder times. But it's not a pretty world. I think India is a very, very good place to be in relative to the rest of the world. I think the only issue in India is the fact that we are already, a lot of that upside is already priced in, and as our premiums to the rest of the world sort of keep increasing, I think it's very hard for the Indian market to sort of give you very strong systemic returns.
So, would you call out that for 2023 we could be in for a low return, no return kind of a patch?
Um, I think that overall that may be a correct statement to make, but I think that you will have different sectors which might do very well. I think that if the higher beta, very strangely, I mean, most parts of the world, higher beta is getting trashed, but I think things like banking and financial services, I think that we are at the cusp of a fairly long upcycle in terms of both credit growth and in terms of, no NPAs, in fact, right back of NPA, strong credit growth. We're in that stage of the cycle now. So you will get that kind of upside. But again, like I said, I think that any long-term investor needs to keep their eyes on is that you will get this cyclical uptrend right now. But longer term, you have to step back and say, how does this whole industry operate? And since we're talking banking, what's going to happen? You have distributed ledgers ultimately. Banks are distributed ledgers. They have a user interface, and I think that a lot of that will become digital. And I think that the banks who crack a very good user interface digitally are going to do a lot better. I think cybersecurity will become a bigger and bigger issue to wrap that in. I think risk management and governance is going to also matter a lot because ultimately banks are a regulatory arbitrage, because governments want to protect depositors' money. So there is your governance architecture matters a lot. Now, if you put these components together, what the banking system should look like with today's technology, today's digital stack and architecture, may be very different in terms of cost structures, etc., than what has existed in the past. Um, So, in the short term, the PSUs will benefit, everybody will benefit because you're on a cyclical uptrend. But longer term, it's the people who transition into what can be who are actually going to become the long term winners. I think you can do this kind of analysis industry after industry, and one would get a sort of good sense of it. I think the other issue is that when cost of capital is close to zero, then cash flow 20 years now out versus a cash flow today, it's almost equal in value. But as rates go up, nearer term cash flows matter much more. So therefore, paying for growth, which is going to result in free cash flows 10 years from now, becomes a lot more expensive. And therefore, there is an obvious correction in sort of dynamic between value and growth kind of parts of the market. So I think nearer term cash flows are going to get valued much, much more. Um, Again, if there weren't going to be such high interest rates, I mean, simply looking at interest rates and saying that I should stay away from equity markets is probably not sensible, largely because you still have inflation, which is an issue. And, if you stay in fixed income or you stay in bank deposits, you're going to lose purchasing power. So one will have to judiciously stay in equities. But I think one should expect the fact that the near term may not give you any kind of outsized or exciting returns in any way. But I wouldn't get out of the equity market and, from any medium to long term perspective. I would be very much invested.
Okay, thank you for that. I would like to draw your attention to the EV space. We've spoken about it, why EV is going to be the next big multi-year trend. But if I look at a stock of Tesla, the ultimate pivot stock, look at some of the other stocks or EV related stocks, all of them are down. Is there an eye opener that EV is here to stay, but EV stocks and EV companies have peaked out in terms of their valuations?
I think this always happens, right? In technology, when you have disruptive technology, you have a hype cycle. And things get overhyped, which is the world will change. That's all right. You may change the world, but will you capture economic value? And I think that's the important part of the thing that people have not focused on. And for a company like Tesla, which is valued more than the next 10 largest auto companies put together, I think it's only incumbent upon us as investors to look at the other auto companies and say, what is their EV game? And are they really that far behind Tesla? And is there that much product differentiation at the end of it? And yes, Tesla has its competitive advantages in terms of its own battery technology. The fact that they thought about the car as an extension, as a sort of physical arms or wheels, so to speak, of a computer, networked computer, and designed it from there, whereas the auto guys have come from a totally different parts of it, trying to integrate technology into an already existing platform. So they both have their advantages and disadvantages, and it's not clear to me that Tesla is the runway single winner. I mean, I think they might get challenged by BYD out of China also, in different markets. Um, so I think, yes, the stock was very overvalued, but I think Tesla is a great disruptive company. And the bottom line is that EV is here to stay. It's not going away anywhere. It is a more efficient technology. When you The energy consumption in an EV vehicle, 95 to 98% gets converted into momentum and motion, whereas in an internal combustion engine, that ratio is 25 to 29%. So will we inevitably move to an EV regime over the next 20 years? I think that's a given. But how do you go there? Do you go through the hybrid route, which the Toyotas of this world are sort of pushing? Or do you go to the direct pure plays like the Teslas and the BYDs are pushing? Or are there other alternative fuels which are sort of a good part of the mix and here to stay, like maybe compressed natural gas or green hydrogen kind of vehicles? Though I personally am a little skeptical on the green hydrogen part of it.
Right. Rahul, while you are saying that, FANG and tech has been overhyped in 2022, a few months ago when we spoke with you, you also said that if Zomato is focused on generating profit, it can become a valuable franchise. Given the steps that it has been taking in that vein, do you believe that it merits a relook?
Um, in terms of their stated intent, yes, I think it merits a closer watch. But I'm much more a believer that, when a company spends so much time, being happy with not making money and burning cash, then that cultural transition takes a little longer than people expect it to. So I would like to see that there is a shift in the actual belief system that that's something that's important and they want to accomplish it. My belief is that if they want to accomplish it, they can. I think the question in my mind is that really an imperative that they believe in even now? And I think that statement would be true of a lot of the tech companies. Culture is not that easy to pivot. And if the culture in an organization is grow at any cost and just acquire customers and don't look at the economic value of that customer, then making that change sort of, operationally or in terms of management directive sounds easy, but it's very hard to overcome very subtle cultural things which are embedded in businesses. I believe that the Zomato management has it in them to make this change happen, but it just might take a little longer than most people expect.
Sure, Rahul. So that was all about the new age tech companies. Let's talk about the old school tech companies as well, the blue chip software consulting names, Infosys, Thesis, etc. Do you believe they will return, let's say, the benchmark gains in 2023, or do you see a bit of outperformance? And also within IT itself, is there a case to be made to look at, let's say, the niche companies, the likes of KPIT Tech, Coforge, Tata Elxsi, etc.?
Look, I would normally look at the niche companies, except that if you look at their valuations, you would find that there's no margin of safety there, right? And I think that larger tech also will give you, you know, again, it's very hard to say what happens in the next 12 months or 18 months in such a volatile world. But if I take a 5-year view, I think most of the IT sector should be just fine. They generate strong cash flows. They're very efficient utilizers of capital. And I think that what's eating the world? It's software. And, who enables that change in software? It's these IT companies. Um, so it's their demand is here to stay, right? I think the thing that they all need to watch out for is that if they don't spend time, energy, attention in trying to disrupt their own business models and trying to enhance their own productivity using the very kind of tools that they create themselves, then they might get into trouble. But my own sense is that most of the Indian IT companies are actually very well managed with very competent folks at the top, and they all have a thought process and a sort of path forward in terms of making a transition themselves. Right? But returns in this sector, like in most other sectors, is going to be volatile going ahead. It's not going to be a simple one-way secular growth upwards. So I'm pretty sanguine about their long-term prospects.
Okay. So let's understand the shareholder here, investors here. Now in India, the consumer demand will always grow, but consumer staple stocks are not the best stocks to invest in. They're expensive. So consumer stocks which are trading at P multiple of 70, 80, they will grow, but they are not the best investments. Does IT services fall in that bracket that these are great companies, the relevance, the importance, the market share gain, everything you mentioned I think is real and it's here to stay. It's a mega trend. But for investors, I look at them as stocks which are available at P multiples of almost 20 times and growth rate of 8 to 12 times, 8 to 12%. Are they great investments?
Uh, I think they definitely make a case to be as part of the portfolio. Are they the ones which are going to generate your alpha? Probably not. Not in this stage of the cycle, largely because a lot of the um, markets in which their customers operate might go through some degree of turmoil. So one needs to be a little bit careful there. But if you look at the rest of the market and you look at valuations in the rest of the market for the kind of ROCEs that these businesses generate, right? I mean, 20 times is still below the ROCEs of most of these businesses, which means that they will spit out a lot of cash. So on an absolute basis, if you're confident that of that 8 to 12% growth, with the kind of 30% plus ROCEs that any of these businesses generate on their operating businesses, I think you should be all right as an investment. But again, the real issue is the volatility ahead of us, because the uncertainty is high, and I think that risk premiums therefore will start to reflect that in some form or fashion. Consumer businesses, yes, it's a big challenge. I mean, 60, 70 times earnings is, as an investor, you've got to balk at that. It's not going to generate decent returns for you. But I think that what's probably more important is to say, what does this market look like 5 or 10 years from now? Who wins? And if you make those bets right, then paying a slightly higher premium is not such an issue. But I would advise that um, the non-professional investors don't try that. I think that sticking to your, very diversified index funds is probably a smart thing for consumer investors to do, in spite of all the volatility ahead.
Okay, so let's wrap it up with one final question for 2022, assuming that we don't get to interact on the channel this year. My final question for 2022 is that you use the word alpha. So 12 to 18 months, or let's say 18 to 24 months, which is about 2 to 2.5 years, where do you see there is scope for alpha generation? Our viewers, they look up to you to understand that which are the themes they can pick, how can they change, how can they make those cosmetic changes in their portfolio just to get a superior return?
So I have to confess to you, Nikunj, that when we look at alpha generation within our own, see, we've always had a blended strategy where we can operate in the listed markets or in the private markets. We are finding all the alpha generating opportunities much more in the private markets in the last 18 odd months, in spite of the fact that even there are bubbles in the private market. But as far as the listed markets go, my guess is that if you want us to look at the next 12, 18 months, your alpha will get generated from the financials. It's just because of where they are in the stage of the cycle. No other reason. But that's where you will get alpha relative to the rest of the market. You might also get it, to some extent in the PSUs, but I would be very wary of that trade, very honestly.
For joining in and sharing with us your outlook for the year ahead, as well as sectors that you see potential in.